Welcome to another Navia Freight Market update. This is for the month of March. During these updates, we try to give you freight information that will help you make better, smarter supply chain decisions. We will be talking with our team members from all over the globe about sea and air freight markets.
Welcome, Alana. We're starting with air freight for this one. Obviously, a lot going on in your world. Can you obviously talk us through the impacts of the Middle East situation? I imagine the hubs in that region are going to be heavily impacted. Talk us through what you're seeing.
Unfortunately, we've seen quite a few carriers affected by the recent war that started over in the Middle East. For Australia, it really impacts us as a lot of the carriers we use over to Europe and obviously to the Middle East as well have been impacted and flights cancelled and schedule changes. So the main ones that would be relevant to the market that we deal with are Emirates, Qatar, Etihad. So a lot of those obviously hub over Dubai, Doha, Abu Dhabi, where we're seeing a lot of the disruption to airspace. We have also received an update overnight that there is restricted or partially reopened corridors. So some aircraft can still depart Dubai. The UAE and neighbouring regulators have created specific routes that aircraft can use safely, which avoid the conflict zones. And these emergency corridors allow a limited number of flights per hour to operate. But most normal passenger schedules are suspended. The airlines are still running cargo flights and aircraft repositioning and a small number of confirmed passenger departures. And we just had news in that it was around 78 flights per hour leaving on those safe corridors, but they obviously can be shut down anytime depending on what's happening with the region as well.
Right. So largely closed with a small minimal amount going in and out. And in terms of, I guess, obviously the airspace in those regions are closed, people stranded, and I imagine that because the planes are stuck there, that means a lot of capacity is taken out of the market. What's the impact if you're not shipping just to that region? What's the impact on your freight elsewhere?
Yeah, so a lot of the carriers do transit via that region, but it also means aircraft, for example, that have come from that region are now grounded in Australia because they fly back to those hubs. So there's a lot of scheduling issues across the world. I mean, an aircraft, for example, that is sitting in Melbourne could be, due over to China or the US in the coming days, and obviously that can't fly back out of Australia. So there's a lot of roll-on effects from that region and not being able to fly back into and back out of the region. Although the impact isn't immediately affecting other areas, that schedule changes and aircraft availability will have a roll-on effect as well.
And I imagine the same would be said for people shipping from China to the US. Same sort of scenario.
China to the US is a little bit different. A lot of the Chinese carriers obviously don't hub through the Middle East, so they will depart directly out of China over to the US. If you're using, some of the Chinese carriers, Cathay Pacific, for example, UPS, Polair, Singapore Airlines don't generally go through that route. So, US and back is pretty safe for the moment. But like I said, when we do take capacity out of the market, obviously everybody's trying to buy space on those concentrated Chinese carriers, which then does cause a roll-on effect.
Yep.
So in some cases, it isn't an impact immediately, but I do think if this continues on, for longer than a couple of weeks, we will see impact on other lanes and regions.
And have we seen any impact on pricing as of yet? Yeah,
so at the moment, we haven't seen a direct impact because the services aren't actually available. So,
okay.
Even if we wanted to book, let's say on Emirates, they're not open for bookings. Etihad and Qatar won't accept. So for those ones, no immediate impact. I do think that we will see probably a war surcharge introduced in the coming weeks when schedules do open back. And I also think that we will see higher fuel prices and fuel surcharges introduced onto the carriers. That fluctuates week to week anyway, but I do think that we will see an even bigger impact based on what's happening at the moment.
Awesome. Insightful as always. Thank you very much, Alana, and we will see you next time. Dave, welcome. Big market update this month. Obviously, a lot going on in the world with the conflict in the Middle East. You are joining us live just after TPM 26 conference. Can you tell us a little bit what you're seeing in your market at the moment as a result of this conflict in the Middle East?
Yeah, no, absolutely. I think very interesting timing with the conflict in Iran and the timing of TPM. Obviously there is a lot of moving parts and things are changing pretty rapidly. So things that we had or that have come out of TPM over the last couple of days is that we did see an initial GRI, a small GRI for the beginning of March. That has kind of taken hold. We expect that to be maintained. And what we have now begun to receive are announcements from the carriers for March 15th. And they are attributing very, very significant announced GRIs for the second half of March because of the current conflict in Iran. Looking at somewhere in the $5,000 to the U.S. West Coast, $6,000 to the U.S. East Coast. The biggest issue, and this was another big conversation topic at TPM, was just the demand levels. And even though we have the ongoing geopolitical crisis in the Middle East, is there enough demand to sustain or maintain those larger increases? And a lot of our carrier partners are saying most likely not. We do expect that to potentially crumble. I think the other big issue that we're seeing is at this point in time in the United States on the Trans-Pacific eastbound market, we are just seeing the very large BCOs begin to wrap up their contract negotiations for the 2026-2027 year. And the larger NVOCCs, we had very good rate indications for named account pricing on Monday to East Coast, West Coast, and various IPI locations. Because of the ongoing issue in Iran, those carriers are beginning to retract offers, and they're going to delay and look at revisiting those initial offers that were presented. So I think that we're going to see a little bit of a delay with regards to contracts being completed here moving into the April time period. And I think a lot of it will depend on the length that we see continued issues going on in the Middle East.
Yeah, I think interesting times ahead. So as you mentioned there, you mentioned that demand, like last time we had this update, demand was very soft and it looked like rates were almost struggling to be pushed upwards. And obviously this provides a perfect example of something that can push them upwards. What do you expect to happen, I guess, moving on throughout the rest of the year, depending on how long the conflict goes? Where do you think that might end up?
Yeah, I think I think demand is still weak, and I think that's the biggest concern. There wasn't a tremendous amount of optimism from the importer side of the business coming out of TPM. Even a lot of the large forwarders and NVOCCs are concerned with regards to what this year will look like, which is good for importers in the sense of pricing typically. I think the big issue that we see is continued volatility, not just from a trade perspective, which again is preventing companies from making longer-term strategic decisions. It is more of a short-term approach. I think some of the other issues that we'll certainly need to look at is with the embargo of oil and vessels moving through the Straits of Hormuz, that can have a significant impact to bunker charges. So 20% of the world's oil moves through the Strait of Hormuz. One of this keynote speaker at TPM this year was Janet Yellen, former Secretary of the Treasury and Chairman of the Fed. Her comments were that if this conflict continues on for more than 5 days, and the Straits of Hormuz were being shut for more than 5 days, it would be the largest impact to oil distribution globally of all time. And right now, what we're hearing in the United States from the administration is that this is or can be something that may last 4-6+ weeks, which again, if the Straits of Hormuz are impacted, we can see significant increases in bunker charges, which will again impact freight cost.
Yeah. Very interesting times ahead. And I guess if you're talking to one of our customers right now, what would you be telling them to do? What's the kind of action piece that they can do?
Customers really need to look at forecasting and really taking a look at what their required delivery dates are. We have a lot of customers right now that are shipping into Menards DCs for various projects, and it's really important that we look at what that required delivery date, what those delivery windows look like, and make sure that we have the right carrier strategy in place. I would say, and at all possible, if you have very hard deadlines for goods arriving, look to bypass any carrier that is transshipping. Look at direct services, even though that may be a little bit more expensive. It really will prevent potential roll pools that start to build up in these areas. Carriers continue to announce significant blank sailings, again, to compensate for the weak demand. And then they're utilizing the current conflict in the Middle East to really try to push those rates to numbers that I just don't believe are sustainable.
Yeah. Sound advice there, Dave. As always, thank you very much for your time, and we will see you next time.
Welcome to another Freight Market Update. Ioannis, thank you for joining us as always. The first thing that's probably going to be on a lot of people's minds is the Middle East situation and how that impacts sea freight. You and I have had discussions about this, but can we just go over what the potential impacts might be?
Well, first of all, it would make sense to break down the situation into two, let's say, very large groups. The one is the Australian/Oceania customers who are dealing directly with the Middle East, and the second one is the ones who are not. So obviously for the customers who are dealing directly, regarding if that is imports or exports from the region, we could quite confidently say that unfortunately at this stage, the trade is completely disrupted. Most carriers do not accept all types of cargo into the region. There are a lot of carriers who do not accept any cargo into the Middle East at this stage. At the same time, for cargo which is already laden on vessels, it seems that the best case scenario would be for those containers to be, I would use the word, dumped into an adjacent port. But again, adjacent is quite relevant. How close that port how close that port will be to the actual destination. And from there, most probably it will be shippers or consignees, pretty much customers' responsibility to try and take it if they want to the final destination. So those customers, they are into a situation that is unfolding on a day-to-day basis. As we speak, we would suggest them to check on a case-by-case basis, but the general rule of thumb is that trade to and from the Middle East is pretty much halted at this stage. For the customers now that are not directly importing or exporting from the region into and to and related with Oceania, there's going to be an indirect outcome, which we can break it down into three major subgroups. First of all, the bunker rates. The bunker is going definitely up. It has already gone up the last couple of days, and we anticipate, if the situation continues, to continue to go up. That will obviously have a knock-on effect on the rates, which by default are going to increase because, as we are aware, the carriers are passing on the bunker surcharges into the customers. So that's the first outcome. Secondly, we do expect to see some additional port congestion, both in the mega Southeast Asia hubs, such as the likes of Singapore, for example, but as well as to some ports who are closer to the Middle East region, such as Colombo, for example, in Sri Lanka, mainly because the carriers will try and redirect their cargo, which is already en route to the region, to these ports. And last but not least, we would anticipate some small or large, depending on the region, equipment imbalances, because we need to keep in mind that currently there is roughly more than 450,000 TEUs of containers trapped in the region, which at this stage they cannot get out. So that is expected to have a small effects on the equipment on the next couple of weeks. And again, what we need to consider is that the situation is evolving on an hour-to-hour, day-to-day basis. So next week, we might see something completely different.
Awesome. Thank you, Ioannis. And then I guess the final question would be, if I'm someone who's moving freight from, say, China to Australia or China to the US directly, I'm not going via a transshipment port, would my freight be impacted at all?
If we had to just provide an answer with one word, it would be yes. Again, we need to keep in mind the bunker effect.
Yep.
The ocean freight and what the customers are paying is made of the ocean freight plus bunker. By default, bunker will go up. By default, your cost is going to increase.
And on the capacity side of things?
On the capacity side of things, as we speak, we don't anticipate major disruptions, mainly because we're looking at a trade which is regional. So all of the mega trades out of Asia into Europe and US are not going to be heavily impacted. I have used an example which I'm going to use again. I think what we're currently seeing is not as seismic for the containerized freight as the Suez Canal closure.
Yep.
We have already been there, done that. So most of the routes are going via Africa regardless. What we definitely need to keep in mind, though, is that any discussions for the Suez Canal reopening and then also distant future will most probably go to the big.
Yep.
What is heavily impacted is Airfreight cargo, because obviously the Middle East is a mega hub globally. So we do anticipate more issues there.
Awesome. Thank you very much, Ioannis. Really appreciate your time as always. And we will see you next time.
Thanks, Greg.